Nope, Mark Lackey, EVP at CHF Capital Markets, never was a farmer.
Oh, that's right, Pat.
But we are talking
I was an urban guy from Kitchener, so I visited a few farms, but that's about the length of my knowledge.
Well, no, you have a lot more knowledge as far as potash is concerned.
Well, as far as the commodities themselves go, that's right, Pat. I mean, most of the individuals out there, when they follow the potash market, they look at the MOP or the muriate of potash market. So,
yeah, you remember you got to describe the difference between muriate and sulfate, right?
That's right, and the one really has the chloride ion, which the muriate does, and that's about 90% of the potash market in the world. And if you were to look at the Port of Vancouver price, they don't ever show an SOP price. It's only an MOP price because, again, it's 90% of the potash. It is effective in many crops. But when you get the fruits and vegetables, Pat, nuts, tea, that whole growing area in China, India, Brazil, SOP is preferred because, frankly, MOP is actually can be quite negative if you were to use it in those particular crops.
No, but it's good for rice and it's good for other crops.
It's great for rice. It's great for some of the other grains, wheat, so on. Absolutely. But the SOP market intrigues me because it's small and the price is about 55-60% higher on average than the MOP market in the last decade. Oh. So there's a great return here for anybody in the SOP market that's successful.
Do you have to have a bet on the agricultural marketplace expanding? Like, do we know the market for potassium is expanding?
You know, it's interesting, Pat, with the whole situation last year when the Russians and the Belarusians had that disagreement and it sent the MOP price down almost $100.
And it's not just the Russians. We've seen it in the past here in this country as well, where farmers just said, you know what, your prices are too high. They go on strike.
It's true. We've seen it in the United States as well. We've seen it in India. Although a lot of crops, you can get away with not using fertilizer for 1 or 2 years. But you can't do it indefinitely, or you're going to do damage to your crops and your soils. So you're limited as to how long you can do that. But we have seen some recovery here recently in the MOP demand and in the MOP price. But again, Pat, that's interesting. But I'm spending my time looking. I follow the MOP market, obviously, but because I'm really more interested in the SOP market, that's where I concentrate my efforts.
Okay, and you've got some names for us: Potash, Ridge, Crop.
Right. And that's an SOP player, Pat, that I've mentioned once before. It reaches all the milestones I like. First of all, it's in Utah. You've got the infrastructure. It's a very pro-mining, pro-business state. The management team is very strong at Potash Ridge. They have a good understanding of their business and where they're taking it. And just recently, they said they would have a permit out in July for their project. They had a permit. Today, they got the water discharge permit. So they're meeting all the milestones. They're in the right sector, in the right jurisdiction. So I think the fact that the stock is sitting 28 to 30 cents, I like its potential over the next few years because there's a great opportunity here given the market they're in.
Okay, but at this point they don't have product out of the ground? Or
no, they don't yet. I mean, production will be down the road. I mean, this is a fairly new play. I only really picked up on Potash Ridge within the last year. So it's fairly new, Pat. I mean, it took me a while to find a good SOP play. But that being the case, these guys have moved it forward pretty quickly in 1 year. And I think where you're going to see over the next couple of years, as you get closer and closer to production, there's going to be a lot more anticipation in the market.
Okay, but are they going to be a low-cost producer? Do we know that in advance?
Yeah, we do know that, actually, Pat. That's a good point. I'm glad you brought that up. They will be a low-cost producer. And that's even in a market.
How do you know that, though? How do you...
They've done enough work already to know that they will be a low cost. Exactly. Size, grade, transportation issues. Exactly, Pat. So they will be a low cost producer. So that's very important because it's great to be a low cost producer, particularly in the area that's only 10% of the total and is growing quickly.
Yeah. Your next one is Canola Resources.
Right.
I don't think I've ever heard of that one.
That's right. Now, it's interesting, Pat. Normally, they're in the manganese market, and somebody said, well, manganese, 90% of that's used in steel. Except, Pat, some is actually used as a fertilizer if you have a high enough grade. You have to be over 50%.
Oh.
So, yeah, that's interesting because most people don't realize, first of all, that if you're at 54% like they are, you can ship this manganese as fertilizer and into the fertilizer industry. And, in fact, they're in Brazil. And the interesting thing is a lot of the soybean growth in Brazil is huge, and soybeans tend to be manganese deficient. So there's a perfect market here for them to sell their manganese as much as possible into the fertilizer business, as opposed to the steel industry, where while there's still a decent demand there, fertilizer demand in Brazil is rising quicker than steel demand.
Okay, but the advantage they also have is that they're local. They're shipping into a local marketplace.
They're very close.
Yeah.
Like for somebody who might have a very good manganese play, let's say in, I don't know, Peru, you might be shipping that to China. Well, there's a pretty significant cost to get it there, obviously.
Yeah.
But this is a local market, and it's in the higher value added in the fertilizer business where they could probably ship the vast majority of what they would end up producing.
And then input capital is your third pick.
Well, Pat, I like the canola market, and I've mentioned canola once before, all the health advantages of both the oil and the meal. Now, the early issue recently, of course, was that canola wasn't getting moved along the rails, given all the oil. But that situation has really been rectified in the last month, and we're getting a lot better service out of CN&CP, which is terrific. So what we did, instead of buying a company that grows canola, we looked at somebody that's in the royalty stream game, along the lines of, say, a Silver Wheaton or Eric Sprott, people that have bought royalty streams
but
in the mining sector.
Not in a mineral.
But in an agriculture product. And I think this is a great idea because it's the first time I've ever seen this. And they're a very new company. And they've signed up a number of farmers, and just along the lines in these royalties, the way it works, they give them the upfront money. They get so much of their production at a certain price. It's kind of like an offtake agreement in a sense as well. So I think it's a great business model. I'm really impressed with what they've been able to accomplish in really a short period of time. And they were fortunate too, because they didn't seem to have a whole lot of farms that were affected by the recent flooding in Saskatchewan.
Okay, but when you're that kind of a business, the royalty kind of a business like that, you got to have long-term contracts. Do the farmers sign long contracts?
Yeah, I mean, I think their average contracts are over 6 years. So that's a pretty, and they're growing. So, and again, it's a fairly new company, but I think the farmers like the concept, some of them, because look, what are your choices? You can go to the bank, or maybe you go to another kind of near bank, or some of these near banks that exist, or you go to a royalty stream company where, the terms are pretty good. And so it gives you more competition in the marketplace for farmers to get financing, which is always a positive thing.
Yeah, and canola. Well, my wife is always on my case. I got to cook more with canola instead of what I normally do.
Pat, if you look at both the Canadian American Heart Institute and the FDA, people want people to get off trans fats, and canola is one of the ways to do it. And we're the biggest, certainly the biggest, among the biggest producers in the world in Canada. So it's a great market for our farmers, particularly in Saskatchewan, but also in Alberta and Manitoba.
Canola, okay, so then if I do that, then I can have wheat. I'm supporting the agricultural business in this country. Yeah, I'll just have a rye instead. Mark, great to have you here.
It's great to be here.
Mark Lackey, EVP of CHF Capital Markets. A quick break.